So you're probably thinking to yourself, Dan, you did a video once the Federal Reserve announced what they're going to do, and you said mortgage rates are coming down. What in the heck just happened? Well, that's what we're going to talk about today. My name is Dan Free. I do this report on a daily basis to inform you guys of the economics behind basically our economy, but we emphasize real estate. Why? Well, because I'm a mortgage advisor, and I'll give you all my information at the end of this video if you want to reach out to me. So mortgage rates spiked yesterday. What in the hell caused all this? Well, let's get over to it because I have an answer for you. So many people, and especially mainstream media, they just tell you things and they really don't explain the whys behind it. My goal here is to figure out and explain to you guys why all this stuff's happening. So let's get over to what happened yesterday. One major thing happened was the central banks of Japan did some tweaking to their monetary policy, and that created shockwaves through the whole world, especially in the U.S. economy and the markets. But there was a lot more information that came in yesterday that a lot of people might not even realize. So let's break it down. It was actually fantastic news for the economy, but really not. And let me explain this. What we're looking for right now is the Federal Reserve to just take their foot off the gas pedal and quit increasing rates. Why are they doing what they're doing? Well, they're trying to tame inflation. Inflation is basically increase of prices on things. So in this report, I'm going to show you some things here, but I'm going to give you a little bit of information here, especially from the gas companies, that's really going to piss you off. So without further ado, let's get over to the data that we had yesterday. So we had core durable goods come in yesterday, and they were expected to come in at, well, the last reading was 0.6. They were supposed to drop all the way down to 0. Well, they came in back in at 0.6. So think about that. That was a much higher number than what was expected. Core durable goods orders, okay? So that means more and more people are still buying stuff and there's orders out there. Okay, that's in its simplest terms. But here's the shocker. GDP, the gross domestic production in the US. Well, again, the Federal Reserve wants this all to start slowing down. So previous reading was 2. It was expected to drop just a little bit to 1.8. It actually went up 25% to 2.4. Might not seem like a huge number. 25% gain is a 25% gain. Okay, so between this, and now we have this. The Federal Reserve, like they've been telling us, is the restriction in monetary policy is going to have people stop buying stuff right through here. So people are going to start losing their jobs because not as much stuff needs produced. Well, it's not happening, folks. The previous reading was 228,000 people first filed for the first time unemployment claims. It was supposed to increase to 235. It actually went down. Okay, I'm not a huge proponent right now of this jobs data stuff, and here's why. I did a video the other day, and it was basically breaking down what the former head of the Dallas Fed said, and he said there's still hundreds of billions of dollars in stimulus money in a lot of, especially local communities, that have not been spent. Hundreds of billions of dollars. It's all for infrastructure. So if you're spending hundreds of billions of dollars, you need workers to do the infrastructure. So how are you going to have a crash in the employment numbers? Just a food for thought. And then the other thing was pending home sales. Well, they came in higher than expected, and this is driving the Fed nuts as well. So that's what we have yesterday. So all this data was fantastic news for the economy, but not so much because now we think, well, with a robust economy, the Federal Reserve is going to keep their foot on the gas pedal. Well, we have some fantastic news that just came in basically minutes ago. So the PCE, what the heck is the PCE? Well, that's the number. That's the inflation number that the Federal Reserve really focuses in on. They put the most emphasis on this one. So the PCE actually, previous reading was 0.3. It was expected to go down to 0.2. Stayed right in line. So this is great numbers. It's saying the inflation numbers, producer consumption expenditure is going down. Again, this is what the Fed watches. Here's the shocker. Previous reading year over year was 4.6. They were expecting 4.2. It came in at 4.1. That's a fantastic number, especially during this cycle with the Fed right now. So now let's get over to some of these areas where, okay, the inflation numbers are going up, but you guys know, if you watch me on a daily basis, the one area that really ticks me off is gas. Because I drive to work in the morning and gas is, $3.80, and then on my way home from work, it's $4.20, and you're like, what the hell just happened? Did I miss something? Well, let's go over some of the profit margins. The profit margins that a lot of these profit margins on gasoline sales. Okay, sorry, I didn't have that in the screen. Let's go through this a little bit. So you go back to 2020, 2019, pre-pandemic, let's say. Pre-pandemic, we were at a profit margins of 3, 4, something like that. That's the norm. Then all of a sudden, COVID hit. Holy crap. So what happens? The oil companies go in here and they're like, okay, well, we can charge more because we can charge more. They increase their more profit margins from the average about 4 to 98% April of 2020. Okay, done then there. Let's go over to where we were just in December. Here's December's profit margins. So remember, folks, the norm is usually about 4%. Over here, 120% profit margins. No wonder gas prices are so high. The gas stations are just pounding us in their profit margins. I did the Q4 of 2022. Oil companies had record profits off the charts. Okay, so that's one area of concern. Now let's get over to some other areas. This is earnings reports for the week. A lot of banks reported, and a lot of people said, remember a few months ago, all these banks are going to go out of business. Everything's terrible. Everything's terrible. And I'm like, guys, hold on. There's a few banks that just did some stupid stuff. Now what are they doing? Okay, so now let's get started. This is the earnings reports for basically the week. Citizens Bank. They're expected to have a profit margin of 0.27 cents a share. It came in at 0.31, a 13% increase. Or surprise. Five Star Bank, 12%. You go down through here. Does it look like these banks' earnings are really falling off the chart? Nope. Okay, so that's one of those areas. Now, with this data coming in, especially the PCE that we went over right here, the number one gauge of the inflation at the Fed, how's the markets like this stuff? Well, we go over here. Dow Jones up 160, NASDAQ up 29. S&P 500 up 29, NASDAQ up 160. Okay, the stock market's doing well. How about the bond market? My main concern is what in the heck's going to go on with mortgage rates? So we go over to the MBS chart, and here's where we're seeing it. Okay, so guys, this is what I see on my screen on a daily basis. I follow the mortgage-backed securities market. Why? Why wouldn't I? It's a mortgage bond trading on Wall Street that's yield is the biggest component of your mortgage rate. I'm not going to follow the 10-year treasury like many people advise you to. You're going to follow the MBS market. What the MBS market's telling us right now is you can squint. That number is up 17 ticks. Basically what that means is when a bond price goes up, like you're seeing right now, mortgage rates are going to come down. So as this data gets absorbed through the markets, I think you're going to see a much stronger Dow Jones and stock market, and you're going to see mortgage rates ease even more, possibly back down to the levels that we had earlier in the week. But a lot of this data is going to be absorbed. It is a Friday. There's a lot of limited tradings on Friday, so you might not see the ramifications of all this until possibly next week. So if you really want to dive in to see what you qualify for, what kind of rate you can get, and you're out there and you're like, I would really love to buy a house right now, but I just don't know what to do, or I don't know if I qualify, please don't disqualify yourself. If you need some assistance, I'm a mortgage advisor. I'm licensed in all 50 states as well as Puerto Rico. We would love to help you. Best way to reach out to us is right through here. Give us a call at 844-775-5626. And make sure you write that down and use that correct number, because if you're one off, you're going to get another mortgage company, and all I hear is just bad news from them because people are like, Dan, the customer service was terrible. And I look them up in our system. I'm like, I have never even talked to you. And they're like, oh boy, we called the wrong place. So make sure you call the wrong place. Or if you're out there and you just want to apply online, click the Apply Now button, the Apply Now button right there. What's going to happen is just going to ask you a few questions, what your concerns are, what you're looking to do, and then within 24 hours, me, or maybe one of my mortgage advisors will be getting you on the phone, Zoom, text, whatever, to answer all the questions that you have. So thank you so much, guys, for watching today. I appreciate it. If you would do me two things today, if you don't mind, please give me a thumbs up if you like the video, and don't forget to subscribe, because so every time I do a video, you get an alert. God bless, and I hope to see you next week. Bye-bye.